Hello and welcome to Finextra. I'm Thea George and I'm here with Jen Doherty from HSBC. We're at EBA Day 2017 in Dublin and we're talking about virtual account management. Jen, thank you for joining me.
Thank you.
So what's driving the virtual account management agenda?
I think it's quite a number of things. I think firstly, there's been a big change in the regulatory landscape from a liquidity perspective, probably specifically Basel III. I think it's fair to say it fundamentally changed the landscape when it came to liquidity. And as such, virtual accounts addresses some of the challenges that we as banks have had to overcome, but also continues to enable us to provide efficiencies for our clients in the liquidity space. I think that coupled with actually our corporates driving the behaviours. So they are always looking for ways to do things faster, better, and more digitally than they've ever done it before. And again, from a virtual account perspective, that really ticks all the boxes.
So can you tell me in fact what a virtual account is and what it does?
I think that's a really good question. There's an assumption out there that people actually understand what virtual accounts are, because in their current format or the traditional format, they've certainly been around for quite a few years. But the view that we're taking on it is actually what we're talking about now is the next generation of virtual accounts. And that is slightly different. So a virtual account in itself, in its simplest format, is one physical bank account that has multiple virtual accounts or virtual IBANs that sit underneath that real account. And those virtual accounts do a lot of what a real account will do itself. So it can pay out, it can receive money in, but also, and very importantly, obviously from a liquidity perspective, is it creates a natural liquidity pool, which drives efficiencies for the clients themselves.
Okay, on that topic, tell me how virtual accounts benefit corporates.
I think it benefits them in multiple ways. The view, again, that I see anyway, is that this is an overall cash management product, okay? So it's not just focusing on the payables, it's not just focusing on the liquidity, it overarches them all. So from a client's perspective, it drives control, it drives efficiencies, it drives further centralization, and they can do payables on behalf of, receivables on behalf of, and again, back to still having the ability to manage their liquidity on an intercompany basis. So I think there's actually quite a lot of benefit for clients using this, along with some of the more traditional liquidity offerings.
Jen, this has been great. Thank you very much.
Thank you.
And thank you for watching.